Welcome everyone to Vested Interest. This is Shane back for the last stock pick of the day video for the week. We are going to look at a recommendation from one of the subscribers to the channel. Justin said would love to see STLA, so we are going to look at that today. Stellantis is the name of the company. This is out of the consumer discretionary sector. Now, before we get too far in the video, if you could do me a big favor, it really does help out with a small YouTube channel like mine, helps to spread the videos a little bit further, helps with the YouTube algorithm. Click all those buttons down below. Hit the thumbs up button if you find any value in the content. Make sure you subscribe to the channel. Click that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Hit the notification bell down below so you're notified whenever I put out any new content. I do this stock pick of the day video series Monday through Thursday, typically when the market is open. We take a look at a company stock that's pulled back on the day, run it through my screener. Now, if it does make it through my screener onto my watch list, that does not necessarily mean I am buying. It means I am interested. Out of the thousands of companies out there, is one of the ones I'm interested in doing more of a deep dive into the financials of the company and then running it through a discounted cash flow analysis, finding a range I'm willing to pay for the company and possibly adding it in the future when I'm adding a new stock and when it's in that buy range for me. Don't blindly buy anything that I'm buying, regardless of whether it makes it through my screener or I'm adding it to my portfolio, or anyone else you're watching on YouTube or any other channels. Make sure you're doing your own investing and investing based on your criteria. Special shout out to all the subscribers like Justin out there. Really appreciate the support. Your views, your clicks, your comments really does help out with the channel, and it does let me know that I am appreciated and that you're getting some value out of the content. So again, really appreciate all of you out there. All right, this is the Vested Interest Stock Screener. This is the criteria we will be looking at. It is not out of the financial sector, so we're going to look at the top 8 criteria here. So it must meet 5 of 8, 6 of 9. If it was out of the financial sector, we'd add in price to book here as well. Back to Stellantis. Now, this is a car company. You may know them better out of their brands: Arborith, Alfa Romeo, Chrysler, Citroen, Dodge, DS Automobiles, Fiat, Jeep, Lancia, Maserati, Opel, Peugeot, I'm not sure where that one's from, Ram Trucks, Vauxhall, Free to Move, Leases. Stellantis is a constellation of 14 iconic automotive brands and 2 mobility arms that are about more than transportation. They're about moving people and making connections. You can read through the rest of this, but again, primarily they are a automobile manufacturer, and these are the brands underneath their umbrella. You can check them out on their homepage, www.stellantis.com, www.stellantis.com. That is their homepage where I pulled this information from. Now, the reason we are taking a look at them, down 7.35% on the day. We are talking about Stellantis, ticker STLA, again out of the consumer discretionary sector, closed out the day at $9.58. Looks like they are up slightly in the after hours whenever I pulled this information. After hours goes till 8 o'clock, so this could bounce around for the next few hours here. Don't know where it's going to end up, but during the day it was down 7.35%. That's why we're looking at it. 52-week range as low as $8.39, as high as $18.32. They are within 15% of a 52-week low currently. They need to be under $9.64, so just under 15% of a 52-week low right now at $9.58. Now, even at $9.62 they are, but if they bounce back above $9.64, they would be outside that. For right now, they rest just within the 15% of a 52-week low. Market cap of $27.674 billion. A beta of 1.13, so they are more volatile than the overall market. You might be able to use that volatility to your advantage, right? Buying on the lows, holding through those highs. You can see where it shot up right here. That's part of that volatility that you're seeing with this company. Same thing here. I mean, that's a big spike up to $10 and some change, then it falls right back down. So that's where that over one being the market's volatility shows up. PE ratio, they did not have one listed as far as from Yahoo Finance. So I probably should have jumped over to stockanalysis.com. If you're interested to see what their price earnings is, this is why I recommend more than one source, actually. Sometimes they don't have the information available. Their EPS, earnings per share, was at negative 0.95%. Earnings date, July 24th. That was today, so I'm assuming something out of their earnings report whether that's a slowdown in car sales, whether that's a decrease in future projections, whatever it is, something shook the market and caused this 7% downturn here. And you might want to go check out that earnings report if you are interested in this company, Justin. Forward dividend 0.77, which gives them a dividend yield currently of 7.45%. Ex-dividend date April 23rd. We are well past that. They are an annual payer, so they only pay one time a year, from what I saw, except outside of 2021. I think they paid a dividend twice there, but it looks like every other year since then they've paid one dividend. They list that they're an annual payer. Now, their payout ratio is a little elevated, 84.24%. I like under 75%, so that is elevated there. 1 year target estimate, at least according to Yahoo Finance, where I pulled this information from, $12.68. So they do see some upside from where it currently sits, but not quite back to its 52-week high. About $5, $6 and some change, $5 and some change, it looks like. Again, payout ratio is a little elevated above the 75% that I'm looking for there. Now, they didn't list their 5-year dividend yield average, but I did go back and do the math myself. Their average dividend yield over the last 5 years is 8.11%. So right around 8%, just a little over. So at 7.45%, looking at dividend yield theory, since they are slightly under their 5-year average at 8.11%, they are potentially overvalued, at least according to dividend yield theory. We looked at the payout ratio. Now, having some trouble with my internet connection, or the site itself, Yahoo Finance was having some trouble today. So I pulled this free cash flow report out of stockanalysis.com, not from Yahoo Finance, where I typically pull it from. They do go back a little bit further, 1 year, instead of just the 3 years plus trailing 12 months or 4 years that they show. Sometimes this one goes back 5. So we can go back to 2020 here. You can see 3.5 billion in free cash flow. 2021, 3.5 million in free cash flow. No, 3.5 billion. 2021, 9.5. 2022, 11.3. 2023, 12.2. Now here's where the downturn happens, right? So nice growing free cash flow up to 2023, but then in 2024, negative 7 billion. So I don't know if that's write-offs. I don't know if that's money that they invested into building out equipment, buying equipment, building out manufacturing plants, something, but they definitely had a downturn in 2023. Didn't pull up their repurchase of shares, so if you're interested in that, go check that out. That is not part of the initial screener. Usually I show it here because I can clip it right there in the same thing. But again, I had to go to stockanalysis.com to get the free cash flow because I was having some trouble with Yahoo Finance. Now, this information is from stockanalysis.com, another source I like to go to besides Yahoo Finance, so I can make sure the information I am giving is accurate and up to date. And I recommend the same to you, 2, if not 3 sources, so you can back check and make sure the information you are looking at is accurate. They do have 8 analysts that have taken a look at this. They do call it a consensus buy. Low estimate of $11.75. It currently sits lower than that. So if it dropped down, came back up to their low estimate, that would be $11.75. That would be a 22.27% increase from the $9.61 they currently sit. Average estimate of $12.65. That's pretty close to what we saw with Yahoo Finance on the previous page. That would represent a 31.63% increase. And if it happened to hit their high of $13.20, that would represent a potential 37.36% increase. And you could collect that. It is a high dividend yield. You could collect that 7+% dividend yield along the way, at least if you bought them now. Now, I like to look at return on capital employed. I like 10% or better here. Now, they're a little under that, 4.75%, so I'd like to see that come up. EPS growth, though, is very nice, 18.41% projected over the next 5 years. I like 5% or better projected. They're looking at 3.1% forward dividend growth over the next forecasted revenue growth, not dividend growth, forecasted revenue growth over the next 5 years. Now, as we mentioned, they are an annual payer. Payout ratio here, this is why I'd recommend more than one source, 2 if not 3, right? They're saying the payout ratio is only 30.32%. So Yahoo Finance had it in the 80% range. So that is definitely a big discrepancy, and this is where I'd look for a third source to make sure to see which one of these is accurate, right? Is it 30%? Is it 80%? Is it somewhere in the middle? You'd want a third source to say that, right? Dividend growth is negative, 52.79%. Buyback yield is positive. Looks like they're buying back more shares than they're issuing, so that is a good thing. Shareholder yield is positive at 10.93%. Very high shareholder yield. That is a good thing. Now, it does look like they pay around March, April, May timeframe for their dividends, but it is once a year. And as I mentioned, outside of 2021, it looks like one payment. I don't know if 2021 was just them getting started, so they paid two, or if one was a special dividend. Not exactly sure there, but it looks like they paid out on March 2021 of $1.06. April 2021, 38 cents and some fractions of a penny. April 2022 up to $1.12. April 2024 up to $1.47. Now April 2023 up to $1.47. April 2024 up to $1.22. And then, so a drop there from 2023 to 2024, and then a bigger drop from 2024 to 25 down to 57 cents and some fractions of a penny. Now, unless they're going to pay out another dividend here in 2025, I mean, they did do that back in 2021, but both of them were paid by April. So I don't anticipate that, I'll say, or by May. Their ex-dividend date was in April. Their payout was by May. So we're past May, well past May. I don't anticipate another dividend. I mean, certainly they could do a special dividend, but if we're just going based on this number, they've dropped their dividend significantly, 52.79%. So that's not good to see, but it does make sense since their free cash flow was down significantly in 2024 that maybe they cut that to maintain some cash flow for some other expenditures. All right, understand the business. They are a car company. I used to work for General Motors, so I'm very familiar with what they do. Very similar company. They're all doing similar things. You know, they've got the combustion engines. They're branching out into the electric vehicles, so all doing about the same thing. Growing free cash flow over the last 4 years. They actually had the downturn in 2024. They could be rebounding again in 2025, but that takes them out of the 4 years worth of growth. Growing dividend, I would say no, since they had the downturn from last year. Again, unless they pay a special dividend before the end of the year and can beat what they paid last year. It looks like their dividend was cut a little over 50%. Dividend payout ratio, I am actually going to give them under 75%. I'm going to split the difference between the 30 and the 80. I would go look and find a third source, though, just to be sure, but I am going to give them under 75% on this one. Dividend yield theory says they're potentially overvalued. It is within 15% of a 52-week low currently at $9.64 or under. Return on capital was not over 10%, so no check there. Now, their earnings per share growth was very good, check there. Now, I will say, I did go look at their price to book just out of curiosity. It says they are around a 0.31% right now. So you would get a check there, but that would still only give them 5 out of 9 instead of 6 out of 9 or 4 out of 8, which is where they currently sit. So they do not quite make it onto my watch list. Obviously, if they were to start growing that dividend again, that would put them in range. If they're growing free cash flow, you know, continued over the next 3 years, I would give that to them. Or if their price per share dropped down, or I'm sorry, they brought up their return on capital employed to over 10%. But right now, they're at 4 of 5. They don't quite make it onto my watch list. Let me know, Justin, what you think of this one. Is it one you're buying? Would be interested to know if this is one you're buying, especially with the drop today. I know you asked about it, so interested in your opinion for sure, and anyone else's opinion on this company, Stellantis. Would really like to hear what everyone's thinking. Are you buying? Are you selling? Maybe you're part of the reason for the 7% downturn today. If you are selling, let me know why you're doing that as well. All right, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of the video. Let me know what you think of the company Stellantis. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you had a great week. We will see you on Sunday for the portfolio update video. We'll be back on schedule now. Should be able to get that out Sunday morning. So tune back in for that one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount. You're not comfortable losing. Always do your own research and invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor. For those of you who made it